Hello, everyone, and welcome to today's webinar. For those of you who do not know me, I am Joe Salvatore. I am part of the CCM team here. If you are returning and have done any of our other webinars from the past few weeks, welcome back. If this is your first one, thank you for joining us. This is the fourth webinar of a series that we're currently doing. So the past 4 weeks, we've done one every Wednesday, covering some topics dealing with the coronavirus and everything that's happened financially with that. So this is the fourth one. We will be doing some more webinars in the future. You can expect around probably the middle of June, end of June, we'll be starting back up with some new topics. You can just keep an eye out in your email for those. To sign up for those. A few things before I hand it off to Randy for the presentation. One thing is that, so the way we're going to do it is Randy will go through his presentation. If you do have any questions throughout the presentation, rather than stopping in the middle and answering them, if you highlight your mouse over the video itself, at the bottom on the control panel, you'll see a Q&A box. You can click on that, type in your question, and then once the presentation's over, I will come back onto the video and I will ask Randy all of the questions that have been asked throughout the seminar. Another thing to note is that we are recording this seminar, so you will see, or this webinar, you will see a recording button at the top of your screen. Everything is private with this. The attendance list, your questions are all anonymous. The only people who can see those are me and Randy. Yes, the recording will be posted. We will send that out for the people who were not able to attend this webinar, or if you would like to rewatch it, you can keep an eye out for that as well. The last thing to mention, so we had a few people ask about the video screen, so I'll probably be somewhere on your screen, top left, top right. If you need to move the speaker little view out of the way of the PowerPoint slides, you can just do that. You can just drag and drop with your mouse. You can move the video wherever you need to within the screen. So with all that being said, again, thank you for joining us. I will hand things over to Randy, and I will come back at the end for the questions. Thank you.
Hello, everyone. Welcome. As Joe already said, this is our fourth webinar in the last 30 days. I want to welcome you back for those of you who have joined us in the past, and anybody new, welcome again. Today, we're going to be talking about charitable giving, and there's a lot of information about that. So hopefully I'll be able to give you good information that you may be able to take. This information, mostly what I'll be covering, is on personal basis, even though you could give assets or money from a business standpoint, but we'll be talking about the individuals and you being able to give money to a charity. Anyway, before I get started, because there's a lot of information here, they are talking about the new laws that went in, and talking about any tax implications. Just to let you know that we, the Chesapeake Capital Management, we're a registered investment advisory firm. Our main domicile is in the state of Maryland. We do have offices and investment advisors in other states, as close as the newest one is one's in New Jersey. He just joined us in less than a year ago. And we have another one just joined us in Florida on the west side, south of Clearwater area. So understand that Chesapeake Capital Management does not provide any legal or tax advice. Even though I personally, as an investment advisor, I do go over many information to my clients. But I always tell you and tell my clients that if you have any specific questions or if you are doing any tax returns, you should talk to a CPA or an accountant that you trust. If you got any legal issues, any legal documents, or any questions you may have, you need to talk to a legal advisor or their attorney. Now, if you don't know anyone, we could certainly help you with that, whether it's the accountants or attorneys. We have a local firm that we work with very closely, and because of that, our clients are taken care of very nicely by them. There are some discounts going on in any legal paperwork. If you need someone that nationally, we do work with a firm in Chicago. They're licensed in many, many states, most of the states, so we'll be able to help you with that as well. So contents we're providing you today is on taxation of a federal level only. We're not going to talk about the state of Maryland, Delaware, because some of you who's listening today are living in either Delaware, Pennsylvania, or some other states. Because of that, we'll be talking about the federal level only. Now, the rules and regulations regarding tax deductions for charitable giving varies by state level, and laws of a specific state or laws relevant to the particular situation may affect the applicability, accuracy, or completeness of the information. Because of that, we cannot guarantee all the information I'm sharing with you is up to date. I have put this thing together at the last minute, so most of the rules and regulations I'll be covering with you should be good, but just in case I either speak or there's some new rules when since that the time that I put this thing together, please understand that. And because of that, we do not make any warranties with regards to such information that we have used will be exactly what the law is. And Chesapeake Capital Management, because of it, I'm sharing this disclaimers with you. I'm going to be covering a couple of the acts that went in, one from 2018 and one recently. The CARES Act, which was enacted and signed into the law, was March 27th of this year. That's 4 days after when the market crashed. Market's been going down steadily from end of January, more specifically February through March 23rd. On the 27th, because of what has happened in the stock market, and a lot of them are mainly due to the coronavirus, CARES Act went in, and that went in this year in 2020. And we're going to talk about how that's affecting the charitable giving. So coronavirus aid, relief, and economic security, that's what CARES stands for. It was designed to help combat the far-reaching impacts of COVID-19. The bill provides increased tax incentives for charitable giving for both you and the corporation, you as an individual, and it signifies the intent to stimulate the philanthropy. So just understand that this went in to help all of us in tax deductions and tax giving. And prior to that, 2 years ago, Tax Cuts and Jobs Act, more well-known, is called TACJA. It's hard to say it, but TCGA, and how that affects in charitable giving. Well, you understand for decades, the rule was that you could deduct charitable contributions only if you itemize your personal deductions. So when you file for your tax deductions, if you did a simple tax forms, you were not able to take the advantage of that. But for most people, either a 1040, 1040A tax forms you file, if you had itemized your deductions, that you were able to take it. I say to you, you should always file taxes, and you should itemize only if your personal deductions, including charitable contributions, exceeds the standard deductions, because that has changed recently. In 2018, Tax Cuts and Jobs Act went in, and that roughly doubled your standard deductions. For this year, 2020, the standard deduction is, for person, individual, single taxpayer is $12,400, And for a couple or people filing jointly, then the amount is $24,800. It's double what the single taxpayer's amount is. And at the same time, when this thing went in, the TCJA eliminated or curtailed many valuable itemized deductions. So people used to write off a lot of things and they're not able to take any more deductions to it. But for a lot of people, because of the standard deductions that's gone up, you may or you may not have seen your taxes go up in the past 2 years. Because of the changes of TCJA, only 10% of the taxpayers itemize their deductions. It used to be 30%. That means only 10% is itemizing, so 90% of all Americans are unable to deduct their charitable contributions. And I'm going to go over a couple of ideas where in a few minutes that you understand how to maximize your tax deductions, and hopefully what I will share with you that you'll be able to use. Now, there's a new thing called $300 universal charitable deduction law went in to help alleviate the economic devastation caused by this pandemic. Congress has enacted the CARES Act of March 27th, and some of the provisions it has, and this is one of them. The taxpayers who don't itemize, even if you don't itemize, you may now deduct up to $300 per year in charitable contributions. Such deductions must be, however, is in cash. You cannot give a property like old clothing or furniture. You cannot give those away and take the deduction. But if you give them a cash, write a check, and if it's given to a 501c3, is a public charity, as long as you give it to them, you're able to take the deduction. However, the contribution to a non-operating private foundation or support organizations are not deductible. Since the universal deduction of $300 is above the line, you don't have to file a Schedule A or itemize to claim this deduction. So when you do your tax returns, you don't have to fill out an extra form of scheduling in a Schedule A. And there's no requirement that you provide any documentations for it. So if it's less than 300, let's say you gave $10, $20, $30 to a different organization and come up to 300, you could take the deduction to it. If you write a check and it's over $250 or give a cash for over $250, I suggest, and you must have some type of documents or receipts from them if you ever get audited or they denied your deduction. So make sure to get that as well. Now, some other provisions that we want to cover under this, there's no limit on how much money you could give away in 2020. Under the TCJA of 2018, taxpayers who do not itemize the deduction, they were able to only deduct charitable contributions to only 60% of their adjusted gross income. Meaning that, again, I'm going to use some numbers, might be much higher than you're used to. I'm only sharing that with you because it makes a lot more easy to understand. You may be only the 1/10 of what I'm going to share with you might be the number, but if you had $100,000 in adjusted gross income and you gave away $100,000 in charity money, you were only able to deduct 60% of that. So 60% of 100,000 is $60,000. Now, if you gave away 10,000, you were only able to deduct $6,000 during the 2018 tax law. Anything that's above the 60%, you were able to write that off in the future years. But for 2020, only this year, because of the CARES Act, it allows you itemizer, anybody who's doing a tax itemizing, to deduct contribution up to 100% of the AGI or adjusted gross income. So if you make an income of 100,000 and you give away 100,000, then you are able to deduct the whole thing. If you have $10,000 income and you give away 10,000, then you don't have any income to pay taxes on, so forth. So just realize for 2020 only, that you are able to take the 100% of the charitable contributions as a deduction. Now, I get a lot of questions about the IRA accounts. What can we do with money that I'm supposed to receive? You all know that IRAs can be pulled out. And when I say IRA, that includes the 401ks and 403bs, because most people, when they retired, they were rolled into individual IRAs. When you turn 59 and a half or older, you're able to draw the money off from that, any amount that you need. However, you'll be paying taxes on it. Once you turn age 70 and a half, for those of you whose birthday was prior to June 30th of 2019, you still have to take the required minimum distribution, normally, not this year, normally at age 70 and a half. But because of the CARES Act 2020, this year, if you don't need the money of RMD, required minimum distribution, you do not need to take any of it, none whatsoever, okay? But if you need the money, as long as you're over age 59 and a half, then you don't have any worries, because normally without this being the CARES Act of 2020, anybody prior, if your age is below the 59 and a half, you had to pay a 10% excise penalty. If you're 70 and a half and you don't take your required minimum distribution, any required minimum distribution amount you didn't take, you had to pay a 50% penalty. Anyway, the CARES Act did not change the rules around the QCD, Qualified Charitable Distribution, which allow individuals over 70 and a half years old to donate up to $100,000 directly from your IRA account to a charity every year without taking a distribution to taxable income. However, remember that under the CARES Act, an individual can elect to deduct 100% of the adjusted gross income for cash charitable contributions. So why is it important to distinguish the two? Well, the cash means you may have some money sitting in the bank that you may be writing a check or wrote the check to a charity in the past to take the deduction. Well, since this year you don't need to take any RMDs, required minimum distribution, and you still like to contribute money to the charity, then you may be wise to consider taking the money out of your cash and send that in so you can take the 100% deductions to that and let your IRAs to grow. That doesn't mean that should be the rule for everyone. It just means that's one of the options. For any of you who may have a specific questions, you should call us, email us to let us know what their question is. Then we'll be able to help you with that as well. So if you're planning to large donations 2020, this may be a smart strategy as long as you're between, again, age 59 and a half to 70 and a half, and not dependent on existing retirement funds, as I said. Now, charitable strategies for higher net worth people are a little bit different. They may do what they call a bunching or clumping of other strategies to benefit their tax deduction by giving the money to a charity. Basically, what that means is they are gathering what they think that they're going to give to a charity for rather than 1 year. They may save it for 3 years and give all the money at once. Well, why is it important? Well, let's kind of talk about this as an example. Since your personal deduction as a husband and wife is only $24,800, since it's less than $25,000, what if all your deductions combined that you put together during the tax year only comes out to be, let's say, $15,000 for sake of our illustration? If you gave $9,000 as a charity that year, you're not getting any benefit out of the tax deduction, because $15,000 other deductions plus writing a check for $9,000, it comes out to be $24,000. Well, that's the amount the standard deduction is. Remember what I said, unless it exceeds the standard deduction, it's not going to help you. So how can you get benefit out of this? Well, what I might recommend you to do is, knowing that you're going to be giving money away, let's say $9,000 a year, why don't you keep that for 3 years? $9,000 saved up in a little savings account or side account and let it grow. You got 9,000, 9,000, and 9,000 in 3 years. That comes out to be 27. So if you give the 27,000 all at once, plus you had other deductions of 15,000, then you have a total amount of 42, which from there you could deduct $16,000 in tax, $18,000 in tax deduction for that year. So since you're giving the money away, you may want to consider giving by putting the money together as a lump sum, bunching or clumping as they call it. If you have recently experienced a larger liquidity event because you either have sold the property or you have received the money through inheritance, you may want to consider about donor advisor funds, simply as a DAF. It's been around for a long time, but with the new increased standard deductions, creating one can be more advantageous than ever before. You can sink a large sum of money to cover multiple years of donation into the donor fund, similar to what I said about even if you don't create the donor fund or put the money in donor advised funds, if you kept the money, clump it, you could do that, but there's another way of doing it is putting the money in a donor advised fund so you have potential to grow. I'm not saying the market's gonna turn around, it would be a great thing for you, but if the history comes to bear, what will happen is when the market goes down for a time being, if the market goes down this year, there's very good chance that within the next 3 years, the market will rebound back. So for those of you who like to invest the money in the market, you may want to put the money into donor advisor funds. So let the money go in there, whatever the lump sum money is, and take the deduction of that whole amount this year if you have a larger tax consequences in 2020. But you do not need to gift the money out, even though it goes into the funds. You don't have to dole that out to a charity right now. You could do it over any time period. So if you decide to take let's say the 27,000 I talked about, put them into a donor advisor fund, take the tax deduction. But since you may not know where to put the money, either next year, year after, or year after that, you could give the money to a charity of your choice at that time. Another provision of that, because of the Tax Act of 2018 and 2020, the individuals nowadays are setting up a private foundations. Private foundations has to be a 501c3 charitable foundation and is exempt from federal income tax due to their charitable nature. Again, because of the tax code, as long as you qualified, you're able to get the exemptions from that. It means that you're getting almost like a double benefit of sorts, because you're putting the money in to a private foundation. So the money that you're putting in is either tax deductible, or if you have appreciated assets like stocks that went up, you could put that in there. And then you could decide where the money will go, because it's a charity. As long as you give the money out, then you'll be able to get a tax benefits out of that. So you don't need to rush into giving the money out today. Set up the foundation, put the money in, take the tax deduction, and then later on, again, give to the charity, church, synagogue, whatever the foundation, as long as they're a nonprofit, that you could give and take the tax deduction for it. Let me talk to you about a couple of trusts that you should consider. Actually, there are 3 trusts. One of the trusts is called Charitable Remainder Trust. There are 2 main types of CRTs. Charitable Remainder Annuity Trust is one, and Charitable Remainder Unit Trust. The difference between the two is the first one, Charitable Remainder Annuity Trust, is in a trust that you set up that you get a same amount of dollar figure every month or every quarter, however the mode of payment that you want. You get a same amount of money coming to you, and then in the future, when you die, the money goes to a charity, whatever is remain in there. Charitable Remainder Unit Trust is a little bit different. You get a same percentage of the money, but because the value of your account might be different because it's in the market, then because of that, you get the same percentage, 20, 25%, 15, but you may have the different amount coming in. Again, when you pass on, the remainder of the account will go to a charity. The third type is called charitable lead trust. Basically, this is an inverse of the other two that I'll talk to you about. What it means is you set up a trust, but in yet the money, or however you want to send it to them, either monthly, quarterly, or annually, any money going to that goes to a charity, not to you. And then when you die, whatever money that was sitting into a trust will go to the beneficiary. Typically, it's to the kids or grandkids or to other places. So just realize there are trusts that you could set up. You should get attorneys involved to set this thing up, and you could talk to us about it. So we could recommend you if you don't know anyone. But if you do know the attorney, make sure they are the ones who specialize in this area. So at this time, I'd like to bring Joe back. I'm sure he has taken some questions. Then after I answer the questions, I'll close out. So Joe?
Yep. Yeah, we do have a few questions here. Let me pull them up. Can I send my RMD to different charitable organizations?
Answer is yes. Just keep in mind, 2020, you do not need to take the RMD, required minimum distribution. However, if you're used to giving money to a charity, you're probably going to continue to do that. So what can you do with that? Any and all the custodians that we work with, they are able to send the multiple checks to different charities from a one account. So if you had a one account that's worth $100,000, and let's say your RMD is $5,000 for that year, require minimum distribution. You want to send $500 to 10 different ones. All we have to do is we need to know their name, their tax ID, their address, and we'll be able to tell the custodians to send the checks directly to those places.
Okay. The next question is it more beneficial to give to charity with funds from my RMD or from other sources?
Well, again, typically the answer in any other years will be a little bit different in 2020. CARES Act made it a lot easier for people to give the money away. But in any other years, let's say in 2019, you would have been better to take the money directly out of your RMDs and send the check directly to the charity. Because initially, if you don't, what will happen is they're sending you the RMD. You got to put them in your tax returns. And if you have a taxable income, that amount will be added to that. And then you'll take the deduction of whatever the money that you're giving to a charity. Whereas if you send the RMD directly, you don't even need to worry about that because money came directly from the custodian to a non-taxable exempt charity, so that you're not adding that amount to your taxable income. So directly sending it from RMD to a charity is much better.
Okay. Next question. I am already giving money to charity but have extra money available. Is it better to increase the charitable contribution or to invest that money elsewhere?
Well, that's a personal choice. I think that we all have some ideas of how much, or how do you want to help the charity. I can't tell you what that amount is. If you like to give more money than the RMD amount and there are money sitting around, well, find the charity they like. I don't want to tell you where to do it because everyone has their own ideas of it. I personally rather give money to a local charity that I know what's going on, but that doesn't mean the national charity is not any good. It's just my personal choice. If I had extra money, and since I'm very blessed with that, I maybe want to write an extra check today to help out the ones. Today, there are a lot of people out there have a special needs or extra needs because of what's going on. You may want to help that out. I would not recommend you to invest that money thinking that the money will grow and then give that money to some other time, because people really could use it today. So if you can't afford it and your heart tells you that, send the money out today.
Okay. Next question. I want to give part of my RMD to charity every year. but can I change the charities and the amounts every year?
Answer is yes. There are two parts there to the question. One is, can you change the amount every year? Absolutely, you could do that. If you want to change the charity, you could do that as well. I recommend, unless it's the same amount to the same charity, whenever you're talking to an advisor or a custodian, you could set up the automatic same amount sending out to the same charity every year, a certain time. But most of the time, if you don't know or you like to change your ways, then just contact your advisor, contact us, and we'll be able to set that up each year for you.
Okay, and this will be the last question here. I need help deciding how much money to give to charity. Is there a general rule of thumb?
Well, again, I don't want to preach or even suggest what that amount would be. There's so many ways that you could look at that. Not only that we're able to give a cash or appreciated assets to someone, but what if you don't have any money and yet you'd like to volunteer to a charity or the cause that you believe in? To me, that's giving as well. So dollar figure in itself may not be as important as what you're able to do. So if you have the cash, if you like to give RMDs, give as much as you can, whatever that amount is. But certainly you don't want to give everything away all at once and not knowing what your future will be, how long you're going to be needing the money for what amount. So it's always good to sit down with an advisors like us, and we'll be able to talk to you one-on-one about that. And if there's any other way that we could suggest, we certainly will make the recommendations based on your own situation. As a rule of thumb, there's no such thing.
Yeah. Well, that's all the questions, so you can close it out, Randy.
Well, once again, folks, I want to thank you for joining us for the last 4 weeks. This has been certainly a different way of talking to our clients. We used to do a lot of seminars and webinar things like that, but we're doing a lot more webinars now, a lot of Zoom meetings and things. I want to thank you for joining us. We are grateful for your business. We take very seriously about managing your money. So if you're not with us, give us a chance and talk to other clients that we have. Most of the times we try our best, even though there are times where you may not think we are, we work very hard for you. And I would recommend, and also I would certainly suggest for you to take a look at us. Give us a chance. It's not bad to get a second opinion. You're certainly not going to get a second opinion from an advisor you're working with today. So thank you again for being with us. I look forward to creating another set of seminars or webinars and sharing that with you. We'll be back to you within a month. So thank you again, and be safe and be healthy. God bless.